Hey guys, welcome back to my YouTube channel. So today's video is going to be a rundown of my predictions for 2019. So as a quick overview, I'll go into them a bit more in detail as well in a couple of minutes. So yeah, the main predictions that I have for 2019 is a sort of a market decline crash, whatever you want to call it. I believe that we'll get 10% declines from, say, current levels today. So that's a retracement towards 2,500 in the S&P. In fact, I'm gonna go a bit more and say I think we'll go below 2350 this year, in this calendar year in 2019 on the S&P, and all the major indices will also get a decline, i.e. the Nasdaq, the Dow. I'm expecting 10 to 20% declines from current levels by the end of the year. Eurozone problems leading on, so a decline in the DAX. So for those of you that don't know, DAX is sort of the German index. So I believe that we will get a 10% sort of decline in this. So it's mainly across the board, but mainly focused in the US and EU mainly. Silver gold rally, I think we'll be doing quite well in silver and gold. I think we could get about 10% gains on silver and potentially about 3 to 5% gains in gold this year. And housing stocks in the UK taking a massive hit. So, stocks like Berkeley Homes, they are massive developers, and in the UK, in London, we've got Barratt Homes, another company that I believe will be taking a big hit this year. Big hits. So if you just want to give a range, 10 to 20%, I think, declines from current levels by the end of the year. Potentially could be a lot worse, but those are sort of main sort of core predictions. Bellway is another company that is a developer. This company do a lot outside of London, which is why I am not too bearish. These guys will more be a hedge to companies like Berkeley and Bellway, Berkeley and Barratt. Sorry. So I would, for example, short those two companies and long this company as a hedge, because this company actually does a lot of building and developing outside of London, and the thesis of this one comes from stocks because of them being in London. So those are the sort of the main overview predictions. So just to give you a bit more of a picture, if you will, starting off with the major indices. I have explained this in another video as well, so I'll just leave the link in the description for that rather than going through in detail. But from current levels, I expect we to hit new lows. Weakening growth, just going to be a bit brief because I've made the detailed videos about these, which I'll leave the link in the description and hopefully in the top right. So, weakening growth, pausing in the tightening cycle, sort of an indication in my mind of further declines to happen in the stock market. So the Fed wants to have ways that they could stimulate more. So at the moment, they're not raising any rates. And definitely just sort of trade war and worries about that, because China is slowing. It's going to affect the US manufacturing and so on. So I'm quite bearish on that. Again, Eurozone is in a complete problematic situation. We've got Brexit going up, but aside from that, they're in a massive problem. And the biggest way to sort of spot these things or to understand is banks are cyclical stocks, so they move with the economy. So if the economy is doing good, banks generally do good, and if the economy is doing bad, banks generally do bad. So obviously this is a German bank, Deutsche Bank, investment bank, and a retail bank. So obviously, no point going back, their share price has been horrible, but the point is they're having a really tough time. There might be a merger between them and Commerzbank, but even if it's not, they are having really serious issues, and that just sort of indicates the level level of problem that they have in the actual economy underlying as well. Silver and gold rallying, mainly that's on the back of the idea of there being a crash, so people going into safe havens. So I think gold will have a small rally, but the point is silver will then jump back on the back of gold. Reason being is because gold just pushes up the commodities, precious metals basket, so that will lead to then silver also catching a bid. So I usually get into companies or stocks or commodities that follow something, and so that way they end up getting a bigger bid. So it's something to do with supply demand in this case. And housing stocks, mainly because of the idea of Brexit uncertainty. Also, another big problem for those of you that don't know, in the UK there is a scheme called Help to Buy, which is basically a way to just in my opinion, as a trader, is just to push the bubble up even further, because it gives young people the opportunity to buy homes on mortgage, as you normally do, but with 5 years of no interest being paid. You don't have to pay any interest, and then after that they actually started the interest. So it's sort of a government scheme. But the biggest problem with that is then companies like Berkeley and Barrett, have like 30 to 50% of their clients that are actually buying on Help to Buy. So the problem that does is that one pushes the market up artificially. The reason why it's artificial is because of the fact that they are not actual credible investors or anyone that has the level of money to buy homes, but actually buying because they need it, and actually investing in the country to, because this is a good opportunity to buy housing. But it's mainly because they're just buying a scheme because they just want to get onto the corporate ladder, the career ladder, or whatever they want to call it, a social ladder of just getting up there onto in terms of owning a home. And I think that's just a big negative. So the reason is because the 30-50%, that's just showing that the amount of liquidity drying up from rich investors or other just older sort of working class men that have, and women that have got obviously a bit more of a chunk than say younger students in their 20s or 25 or whatever they may be. So in my opinion, they're going to have a big problem because Brexit uncertainty is going to dry out more liquidity, and the only customers that they're going to have at the moment is Help to Buy people, and that's also going to start reducing down because of the fact those people will be struggling to get jobs for them, and if they're struggling to get jobs, they're not going to get mortgages regardless. So those are the main 2019 stock market predictions. I will do a video at the end of the year sort of analysing and seeing how it all played out. And then I'll obviously look back at this video, and as a trader, my goal is even if I get 50% of these 4 opinions correct, and I'm playing it smart in terms of risk management, I'll make money. So it doesn't bother me in that sense. And if none of them work, it doesn't matter. That's just the way trading works. But these are the main 2019 stock market predictions for you guys to sort of look at, research more into, and then let me know what you also think about it. Leave comments below. And I hope to see you guys in the next video. Subscribe, like, and comment, and see you guys later. Bye.